I am live. Better be. I've already filmed this video once and it stopped recording as soon as I went to the markets. I was so pissed off yesterday. I swear. But anyways, do this again. And what I went over was my funded previous trades, the trades to come this week, and my next stage as a trader. So when I say next stage as a trader, I've come to realize that I need to make a change. Now, life is just built up of stages, right? And every time you make it to a new stage, you have to assess what got you to that stage and is it going to benefit you moving forward? And when I say what got you to that stage, I mean your beliefs, because you act in accordance with your beliefs. So my beliefs made me act in a way that was consistent with my strategy and my trading plan. It did not break it once. As soon as I set that, I didn't break it. I didn't break it once. I had such strong conviction and such a strong amount of energy in that belief that I didn't take a trade for 5 weeks. And I realized this and I was like, fuck. Okay, I'm very disciplined to my trading plan. But this trading plan isn't getting me through this next stage. I'm currently stuck at the stage I'm at, and I've hit the max, and now I'm looking to grow beyond that and move through the next stage. And in order for me to do that, I'm making a change from systematically trading over to discretionary trading. So there's certain trades, for example, that I would never take when I was systematically trading following that strict trading plan, such as a counter trend trade, or let's say there's a range and the trends aren't aligning, but the market structure and the price action is just so beautiful. I'm like, yes, I can see this dropping down. It makes a lot of sense. But I would not have taken those types of trades because of my trading plan and my belief that I was acting from. So I had to analyze and strategize. And now moving forward, I understand that I need to change my belief to change the way I act, because I have the discipline, right? I've got the discipline to follow my rules. I have the technical analysis to analyze these markets and the probabilities and where they lie. And I've got the psychological skills to be able to monitor my mind and stay in a state of flow and a state of calm and fear-free. And this is going to be my next challenge. And I'm looking forward to it. I am, because I love trading. I fucking love it. I love analyzing the markets. But systematically trading, it's just been holding me back. It taught me what I needed to do, but now it's at the point where it's actually just holding me back from becoming the best trader that I can be. So that's going to be, you'll see when I go on the charts in a minute, you'll see there's pairs that counter trend trades that I would never have taken before. But I can analyze them and see why they have a probability of pulling back. I've just never acted upon it. So there's that. The funded account, we didn't take a trade last week. We lost the week prior. The markets did move spectacularly. But again, I didn't take any trades because, one, I wasn't awake at fucking 5:30, 6 o'clock in the morning. Two, there just weren't the cleanest setups. And I was acting from the belief that I had to only take the cleanest setups. So I didn't take it. But I analyzed it and I didn't know, but I understood where the probabilities lie in the markets for which direction they potentially might intend on moving. But I just haven't been acting upon it. So now I'm gonna raise I'm going to raise the limits on my rules. I'm going to expand my rules now. My rules were just so tight that this, and this. But now I'm just going to expand those rules a little, still using my strategy, still trading what makes sense. But now we're going to open it up a little bit and trade in this larger realm rather than this. So I'm going to share my, it should be in, right? Fuck. I'm going to share my Alpha Capital screen. I'm going to keep updating every single week the progression on these funded accounts, because I know I will pass these accounts, but as documentation, this will be so cool to look back at, see going from 0 in funded on Alpha Capital to hitting one of my goals, which is max funded on Alpha Capital, which is about 300k. Right, this should be working now. So you can see we took a loss. We took one trade on the 100k. We took a loss of 1.7. It's cool. We're still nowhere near the max loss. We're still, there's actually nothing that went wrong, you know. If anything, it was a positive because I ticked off a minimum trading days so that I can place another trade. And if that goes, it hits a 1 to 4, then that passes the challenge. And if it does it over the course of 2 days, I hit my minimum trading days and the profit. This is just the way you got to look at things, right? There's always a positive perspective. I could look at this and be like, I lost my first trade. Who the fuck cares? I would cry about it if I didn't know how to trade and I didn't have the confidence in my own trading skill set. But this ain't an issue. This is just the probabilities, you know? Because when we go over here into the 25,000, you can see profit target, whatever the fuck that is, 6%. We're currently up 2%, I think. I'm very confused. One percent would be 250. Am I right or am I wrong? Yeah. So 2% is 500. Yeah, I need to make 4%. Yeah, I need to make 4%. Minimum trading days complete. And again, stage 2, I need to make 4%. It's not that difficult. I risk 2% on every single trade. That's just a matter of a 1 to 2. The other one needs a 1 to 4. This one needs a 1 to 2. Simple things. Simple things. But I'm going to take a dive into the markets now and make sure this thing actually fucking records. Right, so stop sharing. I believe the issue is that when I go, I came straight over and I didn't actually come back to YouTube to double check. Because I think I need to come back to YouTube in order to do something. And then, see, because now it works, isn't it? Yeah, now it's working. Right. Don't fuck with me. So, I'm going to change the song real quick. This is exactly what I was on about. This is a counter trend trade. And I'm looking to trade this counter trend. So we see the weekly. The weekly has this support, resistance, previous resistance, right? So again, this is what I mean when I've expanded, but I'm still only going to trade what makes sense. Now, this is the thought process I apply to the markets every single time. Does it make sense for the weekly to create a wick pullback to this area to continue to go to the upside? Yes, it does, Danny. Yes, it does. Okay, so it makes sense for the market to create a wick pullback from the weekly. We understand this. So we understand there's a probability of pulling back to this area of interest. Let me go to the daily. The daily is at a high. We've just had an evening star with an engulfing of two previous candles. Okay, does it not make sense for this engulfing to create a wick pullback and then a push down to create a higher low for this bullish market to continue the push to the upside? Yes, it does. Okay, let me check that weekly area of interest. Does it make sense on the daily time frame? Let me have a look. Psychological level. Okay, previous structure point. EMA to come up into this area. It makes a lot of fucking sense, right? It makes a lot of fucking sense for the market to come to this area and push it away from this area. Now, I'm looking at the 4 hour. Does shit make sense on the 4 hour? Well, the 4 hour half shifted bearish. We can see it consolidated. It was showing the slowdown of the buyer's momentum. They had one little push, couldn't do nothing about it. And then boom, sellers came in the market. Now, does it make sense for this market to just continue straight down to the area of interest? Or does it make more sense for this now bearish market to create a lower high to then create a lower low? We can potentially see a rejection from the EMA or above the EMA area to create that lower high, which then I will capitalize on and take the position down to where we understand that the daily and the weekly have a high probability of pulling back to then push away from. I fucking love this shit. Like, in my mind, this is what's going down and going through it. It's so fun. So let me just keep it simple now. Now you've had an sort of an in-depth to the thinking that I apply. I'm going to keep it simple now. CAD JPY, right? CAD JPY. USD JPY. CAD JPY. USD JPY. CAD JPY. USD JPY. I hope you're seeing what I'm seeing. CAD JPY is just a candle ahead. It is just a candle ahead of USD JPY. Now, does it mean USD JPY has to create another bearish candle? No, it doesn't. But it sure does increase the probability of this happening, being so that we're creating almost similar structure on USD JPY and CAD JPY, both approaching a potential area, both potentially creating a high low on the daily to then continue to the upside. And I understand from my analyzation from the previous weeks how USD has seen and been building this shift and strength that we're now seeing in the markets. So what I'm looking for on CAD JPY is the actual trend move is going to be, I don't think I'm looking for a, yeah, I'm not looking. If the market happened to, right, yeah, maybe I would take this. If the market pulls back to this area, just with the 1 hour EMA, it would be so spectacular. I'd wait for rejections, this 2 hour EMA, and I would take it down. But ideally, we are looking to take the trend continuation trade, which is where we can look for big profits and those potential 1 to 4s, 1 to 3s, and 1 to 5s and 1 to 7s. Those are the trade. These are the market conditions in which I've been able to catch these higher risk to reward trades because we're trading with the trend across multiple time frames, not just the daily. It's the weekly, the daily, the 4 hour, even the monthly, right? Not so much the monthly because we're looking to trade like 2 weeks a week, you know. But that's simply what we're looking for. This looks much better for a pullback down to this area, but we could even see the market reject up here and this market reject here, just possibilities. But as of now, we are still looking for the lower high pullback. This USD JPY, I'm looking for the lower high pullback. And I'll explain why now. Because trading the counter trend trades, I'm looking to take the first candle after the engulfing rejection at a higher high. And when price is at the higher high, I need an engulf candle rejection and I need a lower time frame reversal pattern, which this time frame does not have. We have an evening star, but we don't have the engulf, which doesn't give me the opportunity to catch the wick pullback. Like I said, I'm not changing my strategy. I'm simply applying it at a different area this time. I'm applying it at the high rather than at the higher low, and I'm applying it at the low rather than the lower high. But this market has created that for me. USD JPY has the engulfing, so now we have the potential for that wick pullback, and we also have the reversal pattern. Now you might say, Danny, that's not a head and shoulders or a double top. No, it's not. But this is beautiful to me, right? Because we have a consolidation, we have a fake out, and then we have a break underneath that consolidation. Because in that consolidation, it created a support for us, a support which we can then use as resistance to create that lower high. So let me just get rid of this. USD CHF, my baby. USD is strengthening. I said this, I analyzed this, I anticipated for it, and now I'm waiting to execute on it. We saw this one's a weird one. It really is, because we have a left, a head, and two right shoulders. It's a weird looking pattern, but it's actually nice because we have these two beautiful support levels. We have two of these beautiful pushes underneath this very strong resistance, which can now act as a very strong support for us to create the big push to the upside. And being that we're retesting the neckline, we're retesting the EMA, we're retesting psychological level. All I'm simply waiting for is the momentum from this engulfing to fuck off, to give me some rejection candlesticks, engulf candle, 4-hour higher low the next day. And it's key in situations like this where you see such a strong retracement. You need to wait for the rejections and the engulf candle, right? You have to wait for the engulf because read what price is telling you. There's so much strong bearish momentum right now that yes, we may have two dojis, but to take an aggressive entry and a premature entry just before seeing the engulfing, just based off of those dojis, you've got to understand that the market still has a high probability of creating another bearish push. Whereas, okay, we've had a push and we've had a very slow pullback, very nice, timid, slow, and steady pullback to the area of interest. Those are the types of markets, right, that you can enter prematurely and aggressively. But you have to understand the difference. So market creates a higher high, and this is how it's pulling back. It's all like this choppy channel, right? This is our area of interest down here. The market's been pulling back like this. Now the market's here. We had two dojis. The 4-hour created a double bottom, a double bottom shift of structure with the dojis. Now this is a market that you can be aggressive if you want to and take that entry straight away before waiting for an engulf candle and then a higher low and then that. So you can take a more aggressive entry because you've seen how buyers are so strong in the market by the the strength of the seller's pullback. Whereas this, right? Let me make sure this is still filming, because if it's not, I'm going to be pissed, right? Whereas this current pullback, this is what this current pullback is. It's a push, and it's a pullback, right? This is what this market has done. So you need to wait, right? We need to see that dun 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 dun, right? We need to see this before taking the trade. And this is what is key when trading, because you need to understand the different market types, right? We shouldn't write these down. This is gold. This is gold, right? Right. Premature entry is okay. Premature entry needs a slow and steady pullback. Steady pullback. This needs a slow and steady pullback. Right. Conservative entry is required on strong pullbacks. Boom. Take a screenshot of that motherfucker. Because that is key, right? This is gonna help avoid so many losses in trading, right? If you trade the way I trade and you see the markets the way I see them, this will help you avoid so many losses. Yeah, you may miss some trades because this higher low isn't created low enough for you to have a good enough risk to reward, but you're going to avoid so many more losses that in the long run, in the grand scheme of it, your risk to reward is going to be so much greater. So now back after that side tangent, let me just get rid of all this. Right, get rid of all this. I'm waiting for those dojis, the 4-hour shift of structure, yada yada yada. This market, a lot of these markets are markets that I would not have actually added in if I were still following my systematical trading and my belief of I need the cleanest trades possible, because this is the beauty and the beast, right? Because we have this engulfing on the weekly, and you'll see the correlation, right, between my thought processes. USD JPY, as I explained about that wick pullback to that previous resistance, which is that last bearish candle, right? Also area of interest, but more so to that last candle. When we come to Euro AUD, it's again the same principle. We have this support, resistance, it's that last candle, and we're anticipating a wick pullback after this engulfing. When I go on the daily time frame, I see, okay, this is a strong support. The market has previously broke above, pushed up. It's previously broke above, pushed up. And it's also previously rejected to the downside. But what do we have? We have this beautiful giant double bottom. We have an EMA coming into this area. We have a shift of structure. But, well, no, we already shifted structure. But we created new highs, right? We created new highs. We confirmed this giant double bottom. Yet again, we have a psychological level at the area of interest with the EMA starting to come up into it. 4 hours, absolutely spectacular. And this is the type of market where if we had that super slow pullback, right, even if we came below this area, tapped into this EMA, and then, you know, closed back up here for the day, create that nice wick rejection to the downside, then the next day create that engulfing shift of structure, higher low. Yeah, nigga. That's somewhat of what I want to see on this market. but we're looking to take a buy position on a retest of this support to this resistance. GDP AUD. There's a method to the madness, right? There's a method to the madness. Euro AUD, I'm right. Oh my god, it's so fucking clean. Oh man, this shit. I could do this all day long. Right, Euro AUD. Euro got stronger, creating an engulf, and we're anticipating for a higher low to push up. Therefore, AUD strengthening, Euro, AUD weakening, Euro strengthening. Now we also have GDP AUD. GDP AUD created a bullish engulfing, rejecting the EMA, coming above this support resistance. We have this previous resistance, that last candle, which indicates Great British pound strengthening and the Australian dollar weakening. So we have GDP AUD indicating AUD losing its strength. We have Euro AUD strengthening, indicating AUD losing its strength. We have USD JPY pulling back, indicating USD having a breather to continue to the upside. We have CAD JPY pulling back, indicating that JPY is currently kicking in a little bit of strength, whilst the Canadian dollar creates a pullback. So you see the correlation, right? I have my markets, and they all sort of add confluence and confidence for me to each other, because I can see across multiple pairs, okay, AUD is weakening, GDP and Euro pretty much like the same fucking pair, you know, we're literally across, we're not even across, we're like 2 hours of a fucking boat ride. You could get there in a rubber dinghy. Niggers get here on a rubber dinghy. That ain't a joke, you know? That's what's the biggest issue in the fucking UK right now. They just keep coming on their rubber dinghies from Europe. Like, it's the same fucking thing pretty much. So they're going to be very similar in their price movements. So yeah, again, it's just simple shit, in it. Daily resistance, support, super. I love this, right? This left head, right shoulder. I love that, but I love how strong this support was and pushed it all the way up here, because now we have this breakout of this slow again. This is the type of pullback we want to see, right? This so super slow and steady pullback, and when the market creates the breakout, then all we have to do is wait for the higher low, because ideally we want to see the market come up and create a pullback like this, and then we enter down here, right? In a bullish trend, that's what you want to look for. But because we were pulling back and we came down and created this, we are now breaking out, shifting the structure. So now we're simply just going to wait for that higher low, that first higher low after the shift of structure. Ideally, we want to see that at the area of interest, at the psychological level, at the EMA, right? Have that super slow 4-hour pullback, retest the EMA. All these markets are so sexy, right? These markets are so sexy. And sexy is subjective, right? One guy likes blondes, the other one thinks they're disgusting, you know? One guy likes Latinas, the other one thinks that they shouldn't be in the US. You know? Subjective. Sexy is subjective. But you know what? This is sexy. I find this sexy. That's sexy as fuck. So you can see AUD losing strength. That's what my analysis is indicating. USD gaining strength. That's what my analysis is indicating. Whether or not we actually create the overall move this week, I don't know. I can see it happening over just the overall market direction, but it's understanding when that move is going to actually happen. Does it make sense for that move to happen this week? Or does it make sense for the week to have a pullback to create another big push? These are the things you have to think. But that is it for this video. This is even longer than the first video. Fuck, you know. I did have a thought, right? When I was driving earlier, and when I thought about how annoyed I was when that video didn't film, I just thought to myself, yeah, but this gives me the opportunity to make the video even better, right? To make my market dissection even clearer, even more valuable, which I fucking have, because you could just listen. I can listen and I can picture what I'm saying and what I was doing. And this one is so much more in depth. There's so much more detail. Like even that little example that just came to me. I'm in the flow state right now because I love this shit and I do this shit repeatedly. And I just flow and it just 31 minutes has just gone by. I've been sat here chatting to myself in my bedroom for 31 minutes and it feels like I've been here for 2 minutes. I love this shit. And that'll be it for this week. Yeah.